Yeah, that's what it is. Back for just another quick live update for you. Remember what we do here is we're just talking about simple strategies that work. That's what it's all about. You don't need a lot of complicated indicators. You don't need uh, a lot of moving parts, complicated strategy in order to be ultimately profitable in the marketplace. Now, with that said, understand there's going to be days when we may not trade. Today's shaping up like one of those days. A lot of blood in the water when we're getting started. Today is carnage. I say carnage. I mean, it's not terrible, but we look at if you look at a 30-minute chart, crude is in a hole. Where's crude right now? 16. It's been as low as like 14 and change. 16 right now in crude. Just went off a cliff overnight. The E-mini, so the S&P, again, off a cliff overnight. Gold, off a cliff. So, it's interesting times. The reason I say, maybe don't trade is there's just like we talked about yesterday, we've got biases that are different from one another. Now, depending on your trading plan and depending on what time frame you're trading, that may not matter. So we're gonna jump into that and have a look at what that might mean, different ways that we can approach the market for today. So let's go ahead and jump into it. We're gonna start. Let's start with Forex, and then we'll go into futures, and then we'll talk about crypto. All are coming to some pretty major levels, it looks like, and that's going to create potential opportunity for us, right? So starting with Forex, we want to be over here, but we want to be, well, where'd it go? Here, there it is. Forex. So what we're looking at over here is with foreign exchange trading, I do trade it differently than I trade the futures and the crypto markets. And that's because it's a different type of market. I can't say that enough. I probably haven't said it enough. For those that didn't follow me, in previous endeavors, and you maybe just found this site through friends and family, Forex is a utilitarian market. It's also a combination of multiple economies. So, like when you're trading futures, for example, you're trading the price of gold in US dollars. You're trading an index in US dollars. It's the Forex market. You're trading economy versus economy. You're trading the chart you see is the pound versus the US dollar. It's showing you, if you were exchanging one for the other, the rate that you would get. But different factors are going to drive how the pound is moving, and different factors are going to drive how the US dollar is moving. So the Forex market is different. The things that drive those rates, or of what it's worth, there's a whole list of things. When we talk about economic strength and value of what that currency is in the economy, unemployment rates drive it, manufacturing drives it, the interest rates, so on and so forth. There's a lot of factors that come into it. So what we're seeing on the chart, even though it looks the same as a speculative market chart, it's still driven by banks and large companies facilitating cross-border trade. It's entirely different. So to look at it, we can't just come in and say, well, you can just trade the pound, by the way. You can just trade the dollar. You can trade those indexes on their own. But when we're trading it in Forex, we're pairing one versus the other. So, we're looking at 8 major currencies here, and this chart is showing me the strength or weakness of each of those currencies. What this allows us to do is look very quickly and see which currencies are moving. And then the currencies that are moving, we can then pair together and look at that currency pair chart to determine, how and where we might like to trade it. So, like in this case, coming into the U.S. session, the Canadian dollar had been kind of level but below the midpoint, but has been diverging recently from the pound. The pound is our weakest currency here. The yen, the USD are our strongest currencies. If we're just looking at strongest versus weakest, pound versus the yen, pound versus the USD would be a great looking trading opportunity. We have more recent divergence, pound versus the CAD here. Now, the challenge is today there's been so much turmoil, it seems like all of our markets are affected. And when I look across the board and see if I can make this smaller and maybe I can pull this over. When I look across the board here at what's going on, dang it, why does it do that? It's not showing everything, is it? Can I make it just small? Well, let's see here. I don't know why it only wants to show. It's not how it looks on my screen. Let's see. If I do this, and then I do this, it's still not showing you my whole screen. How odd. Huh. Alright, well, I don't know what to make of that. Anyway, sorry, spending more time worrying about my screen than I am about this. So, one of the things when I come in and I look, we're using, so let me just, well, let's pretend that the currency strength is visible and the other is visible as well. When we look at that, we're identifying which currencies are moving. But then that allows us to go over to our chart and look at the potential for continued movement. And we measure that a couple of different ways. But one is I look at the range. So we use an indicator here that tells us the current day's range, how it's been moving right now, and then we can compare that to the average. How did it move yesterday? How did it move for the last 5 days, the last 15 days? And if we've moved already, let's take the pound versus the USD for example, because the pound versus USD, those were our strongest and weakest currencies, right? So if we take the pound versus the USD here, we can see that we've moved 150 pips already for the day. Our average, for the last 5 days is 130. Our average for the last 15 days, 100. We've exceeded what that typical range is. Now, does it mean that it can't move further? Well, no, of course not. It can always move further. I mean, we have a very volatile day. If we look at what's been happening over the last 30-day average, we've got significantly higher ranges. But that's driven by a lot of volatility, into the early part of the 30 days ago, as we started getting past, the really high volatility that was occurring in the middle of March. We'll see these ranges come back down, because as we've seen for the last 2 weeks, the last 2 weeks, the Forex market has really started to contract again, which is more in line. These numbers are more in line with where we've been than this 30-day range is. So anyway, long and short of all that is we're looking at the strong and weak currencies, determining what we could potentially trade, and then we're going over to the chart and having a look at the actual chart data to find out where is our opportunity. Do we have opportunity? So like we said yesterday, for example, we look for a currency pairing that is still a fraction of what its maximum range typically is. Now again, it doesn't mean that it can't move. It just we're talking in odds and probabilities. When we're trading in any instrument, we're talking in odds and probabilities. So we have to figure out where's the opportunity there. And as I look across the board here in the Forex markets, most of our currency pairs, in fact, just at a quick glance, all but two have not exceeded their typical range. The Aussie CAD has moved 64 on an average into the 80s, 80s to 100. The US yen has moved 51 on an average of around 75. Those are the only two, on a quick heads up here, that haven't exceeded or met what their typical range is. So for me, I look at that and I go, well, even though we've got some divergence, we've got some movement in the marketplace, I don't see a lot of opportunity for that to continue to move, because what I would be using the first thing in the morning like this is that breakout strategy. I'd be looking at a strategy, and what it does is the breakout box paints right as the new market session begins, and then we would either go long or short on that depending on the directionality that we see in currency strength, and then it's confirmed if we've got the range